Hello, 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 everyone. Thank you. Thank you for coming. Thank you, guys. What's your name? Victor. I'm Sim. Nice to meet you, buddy. Appreciate it. Oh, you guys look kind of, there's something there, okay? Yeah, you are, 100%. Right? Thank you for joining, everybody. Appreciate you guys' time. Appreciate you guys coming all the way down to the middle of nowhere to be part of this. I know it's in the middle of the boonies. It's like in between Ubud and Canggu, so it's like, thank you. You know, it's a nice place for us to meditate. Today we're gonna go through kind of an overview of what's going on in the market right now, a quick one, especially because with the ETF, there's a lot of unknown news out there. Just looking at the bull case and a little bit of the bear case, which I'm still looking at myself. I know, shut up. And why that's the case? Like why is it that we're thinking about those two things? But the thing we're going to be discussing today is actually the topic of like how does crypto move? You know, wallets, networks, and how crypto moves. Because I feel like there's a lot of people who are making some mistakes in that process because there's some fundamental holes in the understanding of how that process looks like. And especially as a beginner, it's really important for you to understand that because you can click one wrong thing and you can make all of your money disappear. It happens every single day. And that's one of the reasons why a lot of people are kind of wary of this space because it's not like the traditional financial system. There's no second chances. There's no banks. There's nobody who can you can call to say, return my money. So we're going to go deeper into that. But before we do that, as always, we're going to go around the room. Please take 15 seconds to say, what is your name and what makes you excited about crypto today? So, pardon? Okay, perfect. So my name is Sim. What makes me excited about crypto today is that it is the entire future 100 years of history being developed, and we're yet to be the ones who participate right from the base floor. And for me, as a technologist and as a human, it's so exciting to be part of that. I'll just hold it for you.
Yeah, okay. Yeah, mine.
You can mute the phone. You can mute it. Sorry, one sec.
Okay, my name is Mari. I'm from Brazil, and I am excited about the crypto because I have one money, and this money is in my account in Brazil, and I just this money is there, and I don't have any gain in 1 year. I zero, almost zero, and I need to make something with this money, and for me, I think it's a good deal now.
Hey everybody, my name is Jason from San Diego, California, and I've been trading for about 2 or 3 months now, so I'm still quite new, but you know, beginner's luck. I've done pretty good, so I'm excited about that. And yeah, just the exponential growth of the market and what all the experts are saying and everything I'm hearing and seeing, it's very exciting. And just to be financially independent and to have a place where, you know, I have this potential to, you know, triple, quadruple, you know, 10 times my money is very exciting. Thank you.
Okay. Hi, so my name is Quentin. What excites me about crypto is all the opportunities it creates for anybody today and the sovereignty it gives back to people, basically the freedom we can get back and the power we can get back in any industry thanks to this technology.
Hi, my name is Matthias. I liked the independence it gives me and the exponential ability to continue my path and being independent from institution, countries, and living the life I love. And it helped me create new opportunities, new businesses, and leveraging my network.
Hey, I'm Jonna. I'm super new to crypto, but I'm excited about it because I like the idea of having financial independence, and I'm going to suck it once I'm said. And also, I feel like I'm doing pretty well my first couple of months, so that's super rad.
Hey, my name is Alec. Well, I'm excited about it. First of all, like all of us, I guess, to make money, that's the big opportunity. And what keep making me excited, waiting for the right moment and to understand all the charts when we finally should invest the money.
My name is Pierre. I don't like speaking in front of big groups. It makes me a little uncomfortable. What I'm excited about it's just to see how much you give your money to banks, you don't get anything, and in crypto there's so many more opportunities. It excites me.
Hi, my name is Nick, and I'm in this in order to be able to secure a future for my wife and her family. But I've been doing this for 4 years, and I think it's pretty much the best thing that's ever happened since the invention of the toaster.
Hi, my name's Sam. I like the fact that after 9 months of doing this, I'm financially secure for my life. So I'm fucking thrilled, to be honest.
My name's Mark. Yeah, just to be able to make some money, it's nice.
Hi, I'm Mandy, and I'm very new to crypto, and I'm just really excited to be part of something before it goes boom, as I keep being told it's going to.
Hi, I'm Agneta. I've been a bit into it before, but for now I think it's the perfect timing to be right here and now, so I'm happy to be here.
Hi, I'm Michael. I like crypto because it gives me the opportunity to create some companies around that space and hiring people and giving opportunities to others and giving other people, big opportunities to financial freedom.
I'm Jonas. I believe that this blockchain technology is a part of the future, so I'm curious and see how I can be a part of it and maybe contribute one day as well.
Hi, my name is Luciana. Yeah, it's from Brazil, like that. Very excited to be here. I like the fact that we're not dependent on systems. Is not working like that. So, and I don't want to miss this boat. I want to be with like-minded people doing this new thing. And thank you.
Hello, my name is Erica, from Brazil as well. And what excites me the most from crypto, I guess, like being a farm girl, just seeing how hard work is such an old paradigm and how we can potentialize investing in crypto and how that can get you to financial independence and how that money can also provide support to people and build new earth communities and how that circulates in a whole new way without trading time for money and hustle time. So very excited for what's yet to come.
Hello, my name is Jeff. I'm not from Brazil. Sorry, guys. I'm really excited about what can crypto brings to life as freedom, the new ideology. That's definitely the future, and be part of an alternative mindset and movement.
Hi, my name is Victor. I've been trading for about 10 months. What I do believe is that the bank system is going to later, and the money as we know it's going to be replaced by crypto. So I think money and bank is part of the past, crypto will be the future, so I want to be on board before it really starts. So I feel like we are in advance right here.
Hi, my name is Umnia. So I'm excited about crypto for two reasons. First one is to stop doing things I don't like to get money and to just be able to flow and be my creative self and do whatever the fuck I want, which I believe is our birthright. And the second reason is I'm excited to make money. I still didn't make money, so I'm excited for that moment to come.
Hey, I'm Connor. It's just being part of the change of the generational wealth and the chance to be in part of everything that's moving with crypto and making all that money.
Appreciate you guys all chiming in about how much money we're all going to make. But no, it's a point to be made that there's a lot of different pieces to this whole thing. The old system is going to die. The idea of work is dying. The world is changing around us. And this is actually the new stage of that world being implemented. And if we don't get into it, and if we don't understand some of the fundamentals of it, we'll be like the people who never got cell phones, right? The world moved to cell phones and we started running businesses on them. And the people who stayed with flip phones, they were left behind by the world. This implementation is happening much faster. We've already had 10 years of it where we've all been kind of sitting on the sidelines and not thinking about this. Only the nerds, you know, my fellow nerds were participating because it's so technically complex. But the point is that we all need to understand it because our kids and their kids are going to be, their lives are going to be affected by what happens here. So now looking at what's happening today, you know, everything is super bullish. Everything is super bullish. Crypto has shot up. Everything is looking just absolutely perfect. And it looks like, okay, this is the moment that we're all going to get rich. And there is a 50% chance that that happens. That this is the moment we are at the right spot where things do go to where they're supposed to go to, and the normal people get rich. But just last night, something called an ETF launched, the Bitcoin ETF, and everybody's kind of thinking like, where does that fall? Which way are we going? And I'm a psychology guy, just looking at the psychology of how markets play out, and I've been through the previous 2 cycles which had 3 peaks inside of them total, and all 3 of them had the same psychology, the same points. Everything looked bullish, everything would look like it was going to the moon, everybody was convinced, nobody was taking profits, all the average people were thinking, yeah, we're about to get really rich, and that was one of the moments where the roof or the rug got pulled out from underneath their feet. And it's just how the psychology plays out. So for me, there's still a 50% chance that that happens, especially because everybody who is not hedge funds thinks that they're going to get rich tonight. Okay, and remember that they're not going to make it that easy for this process to happen. But looking at the data right now, let's just go through it. And I know some of this might look a little funky to you guys, but this is Bitcoin. Right now we're seeing massive, and this is on the daily chart, which is a good chart to look at. Right now we've seen massive growth. We're seeing completely positive momentum. This is the momentum waves that we look at. There's a visual wave representing a lot of the stuff that people look at. There's money flowing into the markets. It's actually been pretty consistently flowing in, even during the dip part after that we recently had, and also all the way back until about August. It's been flowing in pretty consistently. So those are all great signs. When we're looking at the risk, so this is a metric that uses on-chain analysis. Is this thing picking me up? I don't know. Hello, mic check. Okay, cool. Sorry, just want to make sure. This is a metric of how much confidence is in the markets. The higher this is, the lower the confidence, and the higher the price. The lower this is, the better it is, basically. So right now is a great opportunity to buy still. We've been in a great buy opportunity on the bigger scale of things. When it's in the green, it's like a no-brainer to buy. When it's in the red, you should really think about selling. But the previous peak we had was right around here. So, you know, it's not a one-to-one, but it's showing confidence is high in the markets. This is a metric of our old coins flowing or our new coins flowing. When older coins start to flow and actually sell onto the market, that's a sign that, you know, there's a lot of selling going on. Right now, we're seeing it trend upwards, but it's still in the lower range. And just in simple terms, this is the buy zone. This is the guaranteed buy zone. This is a zone that above that selling can happen. Although there's been times when the market stayed above that in a big way.
So we are in a good buy zone.
Yeah, we've been in a good buy zone the whole time. So on the longer picture, on the bigger picture, you could close your eyes and get it whenever. If you're ready to ride through the turbulence, you're okay. Okay. Now all of these indicators have never failed to call a top, a Bitcoin top. crypto top, which is the related to Bitcoin. This is another metric that actually shows the market value compared to realized value. In simple terms, green, closer to green is buy, closer to red is think about selling. And these spikes, so for beginners, this black line is actually the Bitcoin price, and these orange lines are these metrics that we're talking about, okay? So every time there's been a top, the orange lines actually shoot through the red zones, and that tells us, okay, the market's getting way too overheated and we need to get out. We went up and touched it, but we never shot through it. Sorry, what were you gonna say?
What are these prices? 0.40, 0.80? What is this?
Those are cents, when Bitcoin used to be cents. Yeah, see back here, Bitcoin was 40 cents, 30 cents, 6 cents. Oh, this is a logarithmic chart. This is because these things flow on. You should never look at any of this stuff on linear charts, because these things grow logarithmically, and that's a little hard for our brains to comprehend, right? But these are the prices, actual prices of Bitcoin, which should also tell you something. That it started off at 0.8 of a penny. It started off at 0.8 of a penny, and today it's at $60,000. And it doesn't matter if it's going to go up or down. Like it does that constantly. But over the long term, there has been one single growth curve that it's followed all along the way. If you wait long enough, you're going to make sure that you're going to be on that train in some capacity. And that's just Bitcoin. Many of the other coins follow the same thing. But the point is, this metric shows us that it doesn't look like we're anywhere near the top. Actually, we corrected back down to a level where we're closer to the middle of this cycle than we are to the top. This is another metric that every time there's a top, we see these big spikes. So this was a top. This is how many people are holding it. How many cohorts are holding it? Newer, older, and older. In simple terms, when this spikes, that means everybody's holding it. When everybody's holding it, then that means somebody's going to sell it because everybody's convinced into holding it. Right now, it doesn't look like there's any major spike that's going on. We're actually resetting from the previous spike. So again, bullish, seems like things are going to go up. This is another way of looking at the same thing. Now, some bearish cases, some things that are on the other side, which means, normally these things have to go up in order for us to really see a bull run, which I'm not seeing, are things like this. This is the number of active addresses on Ethereum. It was trending up until about May, and now it's trended downwards, and it's just going sideways. Now, that could be because people are using other platforms other than Ethereum. That could just be because of some other reason. So one metric does not make your full decision, but it does seem like we're not in the growth period that we were before. It actually peaked out back around May. And the bearish case is that there is a potential that we did have a peak around May, even right now, even today, as things are going where they are. We're at 64,000 something, and 65,000 was the peak. There's still a chance that we saw some kind of local peak in that time. Am I saying that's the final peak and then everything is going to go down and never come back? No. But at some point, it's logical that we would see some kind of a bigger correction, and we're going to talk about how the ETF plays into that. But right now, everything is looking bullish. I'm not going to go through everything, but everything is looking bullish. One of the things that I wanted to also point out was just this, that we're seeing a growth in number of addresses that are holding 1 Bitcoin or more. They've been consistently growing. That's this orange line. We're seeing not really any growth in addresses that have, I guess there's some growth in the addresses that have 10 Bitcoin or more, 10 to 100 Bitcoin. We saw a massive spike in the addresses that hold 100 to 1,000 Bitcoin. That was a really good sign. That's what actually, probably prompted this price to run up, because those are the kind of numbers you actually need to make the price run up. Now they've started to dump a bit, so let's see where that goes. And we'll talk about why that could be the ETF. This is 10,000 Bitcoin or more. They're just trending sideways. But again, we just discussed is that these metrics could be simply because people aren't holding 10,000 Bitcoin in one address anymore, because it's worth a lot of money. As far as profit, there's a lot of profit being taken in the market right now. And that's what smart money would be doing at this point, where we're back at the level that we're basically back at the top the previous time. A lot of people missed that opportunity and thought, I should have taken profit at that point. Now we're back at that point. But now people are convinced the opposite, therefore they don't take profit. And I'm not saying you should do one way or the other, but that is the right psychology that's necessary to convince people to stay in a market while the smart money takes profit. But we can see there is profit taking going on. But is it unusual? No. I mean, it's a normal level of profit taking going on, but it's at about the level it was back here which was around the beginning of the year when smart money did start taking profits. The actual psychology of the market right now is, so normally we need to be in full-on greed mode, or in the past we've needed to be in full-on greed mode for profits to be taken in a big way and for things to crash. So for example, we were in that mode from the beginning of the year until May, when the smart money took all their profits. Right now we're not in that zone. We're actually just at the beginning of getting close to leaving the belief zone. And if you don't know what half of this stuff means, as you join our meetings more and more, you'll know, because we discuss the psychology of a market and how these things line up. But this chart down here tells you, what stage, what emotion the market is in. And right now, the most predominant emotion is belief. Everybody believes that we're going to go to the moon. Everybody believes that we're going to get very rich. And we maybe are. Just recently, as of about the September 9th, we saw massive transactions start to take place in the market. Normally, we've had smaller transactions, so below 10 million, basically. Small. Those are tiny little $10 million transactions, right? But as of September, we started to see massive transactions come in. And now they've started to tail off a bit, but that does mean that there's big players who bought into this rally, and that's also one of the reasons why the prices have shot up. Now, all that is great. Most of that is fantastic. And on the long term, Bitcoin has tended to follow a model something like this, which this is called a stock to flow model. This just charts out how much Bitcoin there is compared to where the prices should be. Because when you logically think about it, when something's rare, it goes up in price over a reliable period of time. And Bitcoin goes up right around the period where half the Bitcoin starts getting produced, which is called the Bitcoin halving or the Bitcoin halvening. So please make sure you're familiar with that process, because that's something that's really seminal to Bitcoin prices going up. So all of that is a fantastic bullish case. Even in this process, hello, sir, welcome, welcome. The prices look like they should be up in the multi-$100,000 range, averaging down around $100,000. Leveling off around $100,000 even after the crash. Okay, that's what this model is saying. This model usually tends to predict the average price after the crash. And so in simple terms, what this is saying is that we should be going well above, so above $100,000 in a significant way, and then crash back down to a level of about $100,000, maybe in 2023 or 2024. Okay, that's what this model is saying, and it hasn't failed yet. So all of that stuff is bullish. And the market right now is screaming everything is bullish, right? And there's a high likelihood that that will play out, that we will go beyond 65,000 for Bitcoin, and things will all start to rise all at once, and we will end up getting to a point where we end up making a lot of money in that process, right? That's one scenario that could happen. But for me, the wrench in the works right now is this ETF. So what is this ETF? Everybody's talking about the Bitcoin ETF that's launched. An ETF is an exchange-traded fund that allows traditional investors in the traditional markets, which hold all of the money in the world. Crypto holds $2 trillion of money in the world. They hold $1,600 trillion of nominal value in the world, even though there's only about $150 trillion of cash in the world, which just doesn't make any sense, but that is how the world works. That world has now got a pipeline to get into crypto. And they're the ones who can move crypto in ways, in order for us to go to those crazy valuations of like $1 million in 5 years, which these models are saying and logically has to happen with Bitcoin, we need hundreds of trillions of dollars to flow into crypto. And those hundreds of trillions, at least $100 trillion, there's only one place it can come from. It's the traditional financial markets. What they've done with this ETF is they've actually launched a product that allows for that money to come to crypto. So everybody thinks that should be great. You read the headline and you think that should be great. Those guys are going to come, bring trillions of dollars and put it into Bitcoin. What they've actually done is they've actually given them access not to buy the Bitcoin. They're actually buying futures and derivatives. What a derivative is bets. They get to make bets on the prices of crypto going up or crypto going down. That should concern you. That's concerning me. Because what it then does is that it gives them an incentive to make a bet for $100 billion that the price of crypto goes down tomorrow. Now price of crypto is going up. So I could come over here and sell $5 billion of crypto, of let's say Bitcoin, dump the prices, and my bet for $100 billion would pay me maybe $300 billion. This is the kooky world that we live in. Massive manipulation. And that's what's been going on in this market up until now. So so for beginners, in simple terms, there are actually two markets that we're part of, unknowingly. There's the market called the spot market, where people literally buy Bitcoin and literally sell Bitcoin. Almost everybody in this room is part of that game. We put our hard-earned money to buy something, and we hope it goes up. We make money one way. We hope that it goes up. That's it. And when it goes up, we hope that we sell it, and we hope that we lock it in, okay? There's a whole auxiliary market or a sister market to that called the derivatives markets. Those markets are basically, nobody's buying and selling anything. They're actually taking dollars and making a bet that the price of crypto goes up or the price of crypto goes down. But that system is set up in a way so like, I can make a bet, hello, welcome. I can make a bet that on that market, I don't actually buy and sell the Bitcoin at all. I can just make a bet for like $1,000. And if I lose the bet, I lose $1,000. But if I win the bet, I could win $3,000, $5,000, $10,000. Okay, you can leverage, they use leverage. They basically borrow money to make these bets. But what that does is I can bet, let's say 1,000 Bitcoins worth of dollars. And if I win 10,000 Bitcoins worth of dollars. Then I can come over to the actual market, the spot market, and I can manipulate the price up. If I make the bet that the price is going up, and right now the price is going down, I can come over here and I can buy a ton of Bitcoin, let's say 1,000 Bitcoin. That makes the price go up, potentially. Now, if there's other people who are waiting to buy, when I buy, the price goes up, then those people buy, and those people buy, and those people buy. Effectively, the price gets raised. My bet over here is gonna make me 10 times what it cost me to buy that Bitcoin. So I bought 1,000 Bitcoin, but I just made 10,000 Bitcoins worth of money. Now I have 10,000 Bitcoins worth of money. Next thing I'm going to do is I'm going to say, oh, now the price is going up. I make a bet for 10,000 Bitcoin as if I was, and I'll win 100,000 Bitcoins worth of money. I bet the price goes down. Then I go over here and I take my 1,000 Bitcoin and I sell my 1,000 Bitcoin. Now the price goes down. Now I just made 100,000 Bitcoins worth of money. And over here, I just bought 1,000 Bitcoin and sold 1,000 Bitcoin. And this is an example, but this actually plays out exactly. This is the process that took the price from $65,000 last time down to $30,000 overnight. It was because somebody came along and saw that, hey, right now if I sell $2 billion of Bitcoin, that's going to cause, I think it was $30 billion of actual Bitcoin to sell on the markets. Because when I sell, there's somebody else who has to sell at a certain level, and then he sells or she sells, and then that cascades downwards. I don't want to complicate things too much, but the whole point is it gives me incentive to make bets that the price of Bitcoin goes up or down. And then it gives me incentive to come over here and manipulate the market for the price to go up or down. But all it does is gives me incentive to make sure I keep the price volatile. I keep the people thinking that it's going one way and I send it the other way. And when the people think it's going the other way, then I make it go the opposite way. But in the end, it does nothing for the actual market itself. So this same process is played out in 2017. Okay, in 2017, prices were shooting up. We're rocketing off to the moon. Everybody's on the, I'm going to get rich boat and thinking about what they're going to do with all this money, which they never locked in, actually. They never locked it in. And like, you hear so many sad stories. I went from 100,000 to 10 million, and then I went back to 100,000, or I went back to 80,000. And those people were in that same mentality where they were shooting up, and then they said, a CME futures for Bitcoin is going to be launched. It's a different product on a different market, but it's the same idea. Futures are going to be available on this market. The day that launched was the day that the whole market tanked and went down, and those people lost a shit ton of money in that process. And a similar thing is playing out now, where we saw the market run up. Everybody's getting FOMO, like, get me on that boat. I want, like, there's so much money being made. And then the news launches over the weekend. Hey, yeah, we're launching this product, and now because people have had this trauma from before, we go, oh wait. That was the trick that we got screwed over with last time. So potentially it could make the market go down. Now, it could make it just go down, correct, and then it would go up again, because they make money when the market goes up or down, because they make bets on the price going up or down, right? But the more important thing is Wall Street is here. Wall Street was already here. Private money in Wall Street was already here. Now the real Wall Street is in crypto. And they do one thing really well, and they just do one thing. Take everyone's money. That's why they have all of it, and most people have a third of what they have. Actually, it's even a lot less than that. But the point is, don't take that lightly. Please don't take that lightly. We are now amongst wolves, and they know how to, they control the news, they control governments, they control regulators, they control all authorities, because they literally pay for the campaigns to get them into those spots. They literally control the narrative in the world. They control the whole damn world. You know, and for them to let us get onto this new utopia that we're all trying to build with our beautiful visions, where we're thinking we're going to make some money and build a new earth, whose money are we going to make? Who's going to be sending that money that we're making? They are, and they know that, and they do not like that at all. So now their plan is to gain control of crypto, and the plan has always been to gain control of crypto to a point where they take most of the Bitcoin and a lot of other cryptos. A lot of the crypto is being held by us because we got here first before them. They need regulations. We didn't need regulations. We got here first. We filled up our bags. But now they're coming for those bags. And the process is officialized as of yesterday. It had already been playing out with private money. Now it's playing out with corporate grade bags of money. And get ready for the wildest roller coaster you've ever had in your entire life. Now, that's all problems. Let's talk about solutions. Here's a simple solution. Here's the single way that they're going to manipulate you. They have only one point of control on you: emotions. Emotions, psychology. They know that you have psychology. They know that we have emotions and that we're privy to these ebbs and flows because we're watching the price go up and then we like want to get in, and then the price goes down and then we want to get out. Like, if you just simply back up a little bit and just look at the bigger picture of things, let's just simplify all this stuff. And always, whenever you're looking at these charts, please look at them log. Do not look at them in linear, because linear looks like this. We're used to thinking in linear terms. It looks like, oh my God, it goes up and then it crashes to zero. Oh my God, it grows up and it crashes. And even like looking at previous cycles, oh my God, it goes up and then crashes. But in log, which is an exponential way of looking at things, because these things grow exponentially, it's a perfect growth curve. Any good crypto that you invest in, no, wait. There's 12,600 cryptos last I checked. About 7,000 of them are scams, and they're only there to steal your money. So you buy those, you're going to lose all your money. But if you buy good, solid projects, they go through this growth curve, an exponential growth curve. They're worth pennies, then they're worth dollars, then they're worth hundreds of dollars, then they're worth thousands of dollars, and then they go up to whatever. And obviously the tokenomics makes a difference in this, so don't just take those words for me. But the point is the growth curve is exponential. And it's actually unbroken. When you're looking at the Bitcoin's growth curve, it has always gone up. It goes up and comes down, but way higher than it was before. Goes up and comes down, way higher than it was before. Like way higher, orders of magnitude higher often. So remember that. When you're in the middle of it and they're like releasing all this news, like, oh my God, the stock market collapsed, the banking system collapsed. Guess what? Evergrande is collapsing, all this stuff's happening around you. The whole point is to panic you and get you to sell lower than when you bought it. 100% of anybody who'd ever bought crypto, the blue chip cryptos, the good cryptos, 100% of anybody who's ever bought them would never have lost $1 if they simply didn't panic sell it, right? And the second thing is, would have not been on that boat in the first place if they didn't FOMO buy it, right? If you see something shooting off to the moon and you want to get on that ship, just think like, when milk's price goes up, is that when I run to the store to go buy milk? Like, I want cheaper milk, you know? When the price of crypto goes up, for some reason we all go, now I want to get on this train. And that is exactly the emotional trick that's used against you to try to trick you into getting into that process. And so just remember that either you're on this boat and you pick the right ones and you're willing to ride through all the turbulence, because they are going to cause a lot of turbulence. And then one day, even if it has to be months and years from now, you will be making significant amounts of money. But it's not easy. It's not just like, oh, get in. I heard a bunch of people made money from last year until this year. Therefore, going forward, the ride is going to be the same. The trick is always run the market up, run the prices up. All the normal people who are doing other things with their lives come out of the woodwork and go, now I want to get on this ship. And they go, oh yeah, you want to get on the ship? Here you go. Here's the crypto that you want. And as they're selling it to us, they dump the prices. And as they're dumping the prices, they're making bets on the side. I bet the price of crypto goes down. And then they come over here and go like, watch this. I'm going to sell a bunch to this guy because they all want it. And then that's going to dump the price. And now I made more money on my bets than I did selling the crypto. Plus I sold them the crypto at a higher price. And they dumped the price of crypto. I just made a bunch of money from the bets. Guess what? Next thing I'm going to do is buy 10 times the crypto that they have. And those people who lost all that money are terrified now because they're like, I just lost a bunch of money. This is insane. They buy the crypto, drive the price up. Those people are scared for a while. And then once the prices run up again, those same people bring their life savings again and they get onto the boat again. And this is how money has been stolen from good people by Wall Street, by traders, by the financial system for hundreds of years. I hope that kind of makes sense. I'm like, kind of like, yeah, sorry. Yeah.
So we say never FOMO your way in.
Yes.
When it's like going high.
Yeah.
However, on the grand scheme of things, there's never a bad time to buy, right? On the short term or midterm, we don't want to buy, for example, like in a moment now where it's like it's going to the moon because it might dump, but if it doesn't dump.
For me, it's all comes back to my psychology, right? So they're going to manipulate my psychology. They're going to get me to buy when it goes up. So here's what I'm going to do. I'm never going to buy when it goes up. How about now? Manipulate me now. I'm going to buy when it goes down. I don't care when it goes down. I'm going to wait. I'm going to wait until it goes down. When it goes down, I'm teaching myself I buy when it goes down. You know?
Of having
Yeah,
this
because the most valuable thing you're going to have in this whole thing is not money. It's skills. Remember that. You're the most valuable thing that exists in your own world. The money is a manifestation of your own abilities. And this game is to be played on decade scale. Stop thinking about it on like yearly scale or week. You know, this 3-week thing has been a really enlightening process. Because like a lot of people are like, no, I got it. No, emotions, I'm not going to get messed up. And then the price will go up. They're like, oh my God, I'm missing the boat. You know, and that's exactly the point. They're not sitting over there like, oh, we're missing the boat and this stuff. They're like complete robots with strategies, and their strategy is buy when it goes down, sell when it goes up.
So that means that the discipline is more important than the possibility of missing this mini bull run or bull run.
For me, it is. Because my goal and have a strategy that gets executed perfectly, right? There's people making ton more money. Like there's people made money from dog-faced coins that they made life-changing money from it, right? Yeah, we have some in the room.
I buy and then I sell straight away.
So you're like quick. Yeah.
Yep. So you can buy when it goes up, but just a little bit of a different way.
Perfect. As long as you sell it.
Yeah, quick.
The problem is people on the way up, great, sell it. My goal is to buy when it goes down and then just sit on it, you know, and until it hits my target, I'm not moving. But if the whole macroeconomic situation changes and I start to see stocks take a tumble and the dollar goes up and bonds are sending alarm signals and all of China's collapsing and
how do you define the target though? You said to sell when it's reach your target, but how do you define the target?
good point. So how do you define the target? So the target is defined around what the, like for me personally, the target is 10 times what I invested. You know, it's set at 5 times first, 500% first, and then 10 times I take them. At 10 times I sell 100%. At 5 times I sell 50%. You know, they're hard set targets. But I also started the major part of my investing in 2020, when things were at the bottom, when everybody was fearful, right? So it depends on when you're getting in. That's how the targets would be set. Some it depends on your risk tolerance, depends on who you are as a person and what you're willing to put up with.
That being said, is it important to take profits on the way up?
Yes. So that's where some people have the strategy that I'm going to take profits live. I'm going to dollar cost average in on the way down, and I'm going to dollar cost average out on the way up in percentage chunks, right? That's a great strategy. I have the hodl and take profits once a year strategy. I simply ride the turbulence. So again, for me, it's controlling emotion. And what I'm investing, I'm super happy with, even if I didn't make $1 on it again. So it's like, so I'll just sit on the sidelines and just not sell it until it goes to a point that I feel like it's already hit a target. Or if the market starts to completely scream at me and signal to me, hey, come on, like I'm telling you that this is a point that you should take profits, right? But an effective strategy for a lot of people is, dollar cost average on the way down in percentages. On the way up, take percentages as things are going down. Oh, nice to see you again. All right. But yeah, it depends on your strategy, right? Because a trader is going to have set targets. They're trading on a very short term. I'm trading on the yearly scale, the monthly to yearly scale. Somebody who's trading on a monthly scale is going to have different targets. That's why each person's strategy differs in the way that you execute it. But my thing is also, my goal is to get 100% out of the market at points. My goal is not to sit in the markets forever, because people think, oh, I'm going to be like, I'm always going to keep a little bit in there. No, my goal, because I know this thing is going to crash. There's one thing I can guarantee you. It's going to crash. This is a speculative bubble. The implementation of these technologies has not happened. It's going to happen over the next 4 years, and it's going to finalize over the next 8 years. But I'm an electronics engineer. I can tell you this. We don't have the brains and the technical capacity right now to implement these things. The world doesn't move as quickly as crypto does. So if the implementation isn't there, the usage isn't there, the actual fundamental adoption by the globe isn't there, you know what happens to those assets? They crash like nobody's business. And we know crypto does that. 80% crashes, 90% crashes are part of this game. So it's going to happen at some point. At that point, before that point, 80% on the way up, I want to be out of the markets, sitting on the sidelines with my cash, because I made more cash. That's my strategy, right? Other people might have completely different strategies. Some people DCA out on the way up, dollar cost average out on the way up. Some people like to sit a little bit in the market. Some people just buy it and hold it and don't even sell it because they don't have to pay any taxes, right? So it depends on what your strategy is. But the point is, on the bigger picture of things, do not let your emotions get taken advantage of in this process. If you're chasing things that are leaving without you, wrong emotion, for me at least. You might win out this time, but play that game for 10 years and that will 100% make you lose money, because that is just how this game is set up. Do not get scared on the way down. The only reason you're scared on the way down is because you're in that boat. You're completely in a boat that's going down. If you'd taken some profits on the way up, you'd be sitting on some dollars on the side. So when it goes down, you'd get happy. When it goes up, you'd get happy, right? So think about what your plan is and how you want to go through this thing. But the wolves have arrived. They are here. They've hooked up their pipeline. They have more money than, like crypto's 2 trillion is like a drop in the bucket for them. They can pull that out of accounts like no problem. But now they've purposely hooked up a pipeline to make bets, not to buy the crypto. So as far as I see it, especially on the medium term, I see this ETF thing being a terrible, terrible thing for crypto. In the long term, yeah, if we ride through the turbulence, the point is for them to take their wealth from that collapsing system, and they need to put it somewhere. And they literally can't put it anywhere else simply because everything else is denominated by US dollars. If the US dollar is being crushed, I don't care if it's worth $1 million. Like Tesla stock went up to $1 million. Okay, Tesla stock went up to 1 million rupiah. Does anybody care? They're like, holy shit, it just crashed. But if we say $1 million, we think, oh my God, this is like some kind of special thing. No, $1 million will one day be exactly the same worth of 1 million rupiah. You just have to wait long enough. The point is, they have all their wealth denominated in dollars. Stocks, bonds, derivatives, real estate, art, whatever kind of asset you're looking at is denominated in dollars. The dollar is dying. So they literally can't put their assets anywhere. And so they had to invent a new asset class, which technically isn't denominated in dollars. You can denominate it in Bitcoin, I denominate it in XRP, but they've developed a new asset class. And asset classes expand against that whole thing, against the inflation of the currency supply. So what their plan is to bring their wealth and move it to this asset class as a bit of an arc over the next 10 years. as they collapse the whole world, and then we own nothing and we'll all be happy, apparently. That's the plan. Look up the World Economic Forum if you haven't heard that motto. They're putting up ads on walls saying that their plan is to make us not own anything and be like just cheery and joyous about that. And that's the process. The process is take the traditional financial world, crush it, crush the value through crushing the dollar and crushing the assets themselves, deflate the value of the assets, the real value of the assets, not the dollar denominated value, while they sit in this boat that's called crypto. But they do not like us sitting in the boat first, so they're gonna try to kick us off first. So now, that's kind of the overview of what we're looking at. Now, let's just look at understanding, like, what is crypto? What's a blockchain? What are wallets? Like, we have a lot of newbies, so I want to bring in a professor to give an explanation of this. Oh yeah, what's up?
Right before that, can you bring a bit of awareness about the black swan and what you explain in the group, that everything can crash and that you hold everything, repeat XRP?
Yes.
And get out of this.
So,
can you repeat the question? Bring a bit of awareness about
yeah,
it?
can you shed light on what I said about black swans and why I think that there's going to be some kind of a correction, and why? So, this exact same moment that we're going through today, I've been through 3 times since 2013. Exact same moment, exact same emotion, exact same feelings, exact same patterns. We had a top, things crashed, people weren't convinced that that's a crash, things go up a little bit, people get a little hope, then it crashes again, people think like, okay, well, I don't know what's going on, but I still hope it goes up. It does go up, everybody gets convinced that, oh my God, we're going back to the moon. Yes, this is my second chance, I didn't miss the boat. And then the real crash happened. And at one time in 2013, it was a full crash. It was like 70% crash, but that actually wasn't the crash. It had gone from single digit dollars to $200. This process played out. Then it crashed back down to double digit dollars. Then it went from double digit dollars to $1,200. So it literally, but in that moment, people were convinced we're about to get rich, and nobody sold, okay? And secondly, looking at what's going on in the bigger financial ocean, which is the stocks, bonds, real estate world, we're having a full-on fucking meltdown. Like, people are kind of underselling that we just kind of sit and hang out like, oh, okay, everything's fine. No, China's property sector is $62 trillion. It's 30 times larger than crypto. And they're having a full meltdown in their own system. We're watching the banking system completely collapse around us. Like, banks have stopped working in many countries. Banks have gone offline. People's money was offline for days, sometimes even longer. China is fully blacked out. Not fully, but large parts of it is blacked out. Look, I don't suggest anything, but yes. Yeah, I mean, my actions should speak. I'm 100% out of bank accounts.
That's what I believe as
Yeah.
well. Like, people tell me I'm crazy, that the banks are so strong, but for me, it's like we are close to a massive financial crash.
100%.
The bank's gonna go bankrupt.
I can guarantee you one thing, 100% the banks are going to go. There's something called a bank bail-in. Most banks in the world around 2016 finalized regulations that allowed them to do something called a bail-in, which says the moment that they crash, they're allowed to take the funds from the accounts and give it to the investors. That process has been legalized. And fractional reserve banking has gone down to 0%, which means they have to have 0% of the cash as a reserve in order to service the use case. And now we're having Bank of America go down. We're watching Santander go down. We're watching all these banks have issues. My bank the other day was like technical difficulties. I'm like, man, I'm trying to move like pennies. I'm trying to pay for something online, and it's, you know. So what I've personally done is I've completely moved out of the banking system. I sit in crypto and I have it in stable coins and I have it in the market itself. And then I just take some of the stable coins and I convert it into whatever the currency I need and spend it wherever I need it, because I'm custodying it myself. But the plan is that, like, there's a new system called ISO 20022 banking system that's coming out. I'm sorry I've rang this bell so many times, but you need to hear about it. It's going to be the new system where value is allowed to flow across the world in seamless motion, all the way from stocks, bonds, derivatives to everywhere. And it's gonna, those rails that are being built are going to require us to sign our entire financial freedom over to this new banking system, 100%. okay? Because that system says every single thing you do is tracked. Every single wallet in the world is controlled by central banks and governments. Every single penny that moves, the tax is taken off automatically and you have zero control. All dissidents who decide to not follow the rules of the system will simply cease to have bank accounts. And apparently we're gonna sign up for it. So in order for that process to happen, one thing has to happen: the complete collapse of the banking system. And the banking system is based on debt, right?
The poor people are going to get poorer and the rich people are going to get richer.
Like we've always had.
The history is
Like we've always had. It is just getting accelerated. But here's how money is created in the world. It's not created by central banks. Central banks create a small amount of the money in the world. They hand it to their bankster friends. The bankster friends go out and they, first of all, they spend it on assets as much as they like. Then we go to the bank and try to get a loan, and the bank creates a loan, and in that creation of the loan, the money is created out of thin air. It's just manifested into existence. But what the bank does is then it goes, okay, look, I gave my loan to this person. This person is reliable and they're gonna keep paying me. So I'm gonna put them down as an asset because they're making me money. Assets make me money. And banks have to have assets and liabilities balanced on their sheets. So they put you down as an asset, right? Your business is an asset, you're an asset, your house is an asset, your car is an asset. The bank owns all of that and reliably knows you're gonna pay for it. Then they went and shut down the entire world. They shut down every business, they shut down everything, airlines and every single thing in the world is shut down. Now, all of those assets that were actually paying, the bank and were actually balancing their books, now they're not assets, they're liabilities now. Because they're actually not making the money, they're actually costing them money to keep. When that happens to any company, any bank, any government, next thing that happens is bankruptcy because nobody's paying them anymore. So then when bankruptcy happens, first of all, the business goes bankrupt, the house goes bankrupt, the person goes bankrupt, all their assets are taken and given to the bank. The bank still isn't able to generate cash against them, so they liquidate them. Then the bank goes bankrupt, and then all of those assets belong to the shareholders of the banks. And the shareholders of the banks are the ones we call they. You know who they are? Shareholders of banks. They are the shareholders of BlackRock. They are the shareholders of Vanguard. They are the shareholders of the entire world. And this is how they're going to take everything from people. And this is how we will own nothing and will be happy. And for that process to happen, remember I said banks go bankrupt. Banks going bankrupt also makes countries bankrupt. Banks and countries going bankrupt would be kind of the thing that we would need for us to sign up for any new system as long as we're allowed to at least feed our children. And this is the plan. And it's 100% in the cards and it's going to happen. Because, sorry, I'll get to your question in a second. There's $300 trillion of debt in the world, but we only have $150 trillion of money total in the world. We got to pay $2 for every dollar that we owe. I mean, yeah, sorry, $2 for every dollar that we own. One sec. What was your question? Land will always have value. The problem is, what will it cost you to maintain the land? Oh, they're coming for your land. And here's how I do it, okay? I'm they, and I want to come for your land, okay? I say that you owning land is bad for the environment because you're destroying the planet, because you have this like ownership thing. So we're going to put ESG taxes on you. First of all, your property taxes is going up because we need to pay for the socialist system we're building. Secondly, I'm going to put environmental social guidance taxes on you. And you're a horrible person if you don't pay those, right? And you don't have a business anymore. You don't have money anymore. And they've closed off all the doors for you to generate prosperity. So then they bleed you dry for the land, and then they come take the land and monopolize it under these same corporations. So unless you are able to fund that land through all of this, and this is just one example, there's more means of control for them to take land in different places. Now, I'm not, pardon? Unrealized capital gains taxes. Your land is worth $1 million, now it's worth $5 million. We're going to charge you 30% on that $5 million, even though you don't have the $5 million. Oh, now you got to sell the land? We'll take it. I'm they, and we'll take it. No problem. We'll give you that so you can pay the taxes, right? So, and this isn't going to happen across the world. It's not like every piece of land everywhere will be taken, but that's in their manifesto. Exactly. Exactly. And then they just go like, oh, you lost all your money? Sorry. That's a you problem. You know, why did you do that in the first place? Oh, I think DeFi is going to blow up like fireworks we've never seen before. Simply because of this. DeFi is wholly linked to Tether. DeFi and Tether go hand in hand. The issuance of Tether is one-to-one with the growth of DeFi, and actually the total value locked of DeFi. Okay? Tether is a scam, first of all. Tether is a scam where they're not backed by dollars, they're actually backed by something called commercial paper. That commercial paper is Chinese debt, which we just talked about is dying. So they're backed by nothing. Kind of like how those banks end up being backed by nothing. So now all of DeFi is backed by a scam coin that they keep giving like regulatory clarity. And that scam coin is backed by nothing, Chinese promises. When those roosters come home to roost, then DeFi itself is going to take a hit. And here's how I'm still playing they, right? Here's how I make sure that I keep you out of crypto. I release to you the magical world of DeFi. Mint coins, print money out of thin air, magically make yourself prosperous, right? And many, many people will become prosperous doing that. But you know what they're doing? They're getting into DeFi and they're getting out. And they literally make value and then they dump it as quickly as they can, and some other person holds the bags, right? Those are the people who are going to make money. The people left holding the bags, when this all happens, are going to go through one of the worst crashes we've ever seen. And then they are going to come in and say, well, see, you're clearly not capable of investing well for yourself. What you need is regulations. You need us to come in and protect you like we did with accredited investments. So we are going to accredit you. Only accredited investors will be allowed to participate in DeFi. And then central finance comes and takes DeFi and coerces it into their systems and effectively does the same thing. Because, well, we're just allowed to print money, make coins out of thin air, and pay people while they're playing video games. It's not going to be that easy. So I feel like DeFi is a very short-lived, DeFi the way we have it, this free world of DeFi is a very short-lived thing. Within the next 4 years, we'll see a massive collapse of DeFi, and then we will see the single greatest growth in DeFi ever, but it'll be centrally controlled DeFi. Hope that makes sense, right? Any other questions? So what is crypto and how does it move? Okay. First of all, what is a blockchain? Wait. You gotta turn this on. There you go. That is the professor. Look at her. She's clearly a professor. What's going on?
I need to share.
I already shared it.
Yeah, no, I need to share the computer audio so the people in the Zoom can hear it.
Okay, yeah, please do that. Oh, dude, you are professional, bro. Thank you. Nope. What's going on?
Today we're going to talk about Bitcoin. Bitcoin is a little because the thing about Bitcoin is that it's decentralized, which means you don't need a bank. They will only be 21 million ever in the whole world. Bitcoin was invented by Satoshi Nakamoto. No one knows who it is. It's from nursery. How did it all work? These are all the Bitcoins. Timmy has them. Ellie has them. We all found X represents the transaction. It's sending right here. Can you give me one Bitcoin? Yeah. Thank you, Teddy. Thank you, Teddy. Now that's the blockchain. Anyone can see this, but it's all anonymous. So that's the Bitcoin. I'll talk about this fun stuff. Why is it so expensive? Bitcoin is secure, anonymous, and limited. So everyone wants it. That's why the price keeps going up. This is, I don't like Bitcoin. I love Bitcoin, I love India. Okay, you want to see what I do?
So that is literally the best example, explanation of what a blockchain is I've ever seen. So we all just have wallets. We all just have these little pouches where we keep these coins. And when we send them to each other, the computer stacks that little block in the middle. It just goes 1 cent to another. It puts it in a block. And then that block is turned into a block and hooked together into a chain and stored on the computer, and that's called a blockchain. That's all it is. That's the fundamental technology that we're looking at. Then you have to, whenever you're thinking about holding your crypto, storing it, sending it, you have to always think about it like that. Like, where's my Skittles bag? Where am I keeping my Skittles? How am I moving my Skittles? And where is that block going to be kept? Like, where's that transaction list going to be kept? And having that kind of very fundamental basic understanding will really help. First of all, then what are the Skittles? What are the coins? It really gets missed. Like, why do I want these freaking coins? What, they're just magically money-making machines? No, these coins do stuff. These coins pay for computers that do stuff. Bitcoins pay for a network of computers that allow you to store value. They allow you to literally keep your Bitcoin somewhere where the government can't print it, and they can't steal it from you, and they can't take it from you. That's super valuable. That's why we pay so much for Bitcoin, because like, whoa, I want to store my value like that. That's like gold, but it's better than gold. I'll pay you way more than gold for this thing that allows me to store value. But all it is a computer network that stores value. And we buy these coins so we can use that computer network. We can pay to use that computer network. Ethereum is a coin that pays for a network of computers, but though that network of computers does something different. It lets you program that computer so that you can run apps on top of it. It's exactly like the internet. Internet's a bunch of computers connected together that you can pay for, and the internet gives you so much value in the world. Ethereum is a network of computers that lets you build apps on top. So it's like buying a coin to use the internet. So when you're buying an Ethereum, you're investing in the internet. Then there's apps that are built on top of Ethereum that actually are apps that are running on that computer system. So when you buy a coin of those, you're paying to use that app. So with this future world that we live in, this digital form of payment and money will be used to pay for every single thing that we do out there. Now, right now where we're at, if you do it right, it's great. If you do it wrong, you can make all your money disappear. If you go into Google and search for the wrong thing and you click enter and you type in your passphrase, hackers come and steal all of your money. And it's happening every day. Some people in this room have actually gone through that process. Okay? So it's important for us to understand what is a wallet. Wallet is a bag that holds Skittles called coins. Simple as that. Now, there's different wallets. There's the wallets that, first of all, when we buy it on an exchange, the exchange keeps it in the exchange's wallet, right? Exchange has its own wallet. So people, if you're a beginner and you don't know what any of this stuff is, stay in that wallet. Contrary to what all the crypto heads will tell you, stay in the damn wallet, because they do password recovery. They do security. They do enterprise grade processes for you to be able to maintain that wallet. They have customer support. If you mess it up and send it to the wrong wallet in their own system, they'll actually give it back to you and put it back into your wallet. That's the benefit of keeping it in the exchange's wallet. But then, if you want to custody it yourself, because you can actually custody your crypto yourself, Then you would pull it out and put it into, let's say, a hot wallet, which is like a cloud wallet, which could be like Trust Wallet, Exodus, all those kind of wallets. Then you're telling the exchange, give me my Skittles, I'm going to take them and put them online somewhere. Okay, and you put them into that other wallet. And we'll look at the process of what can go wrong in that, what can go right in that, how to look at it. Or you can put it on these little hardware wallets that we're talking about, right? That literally says, I'm going to take my crypto, and it's not like it's physically stored on there, but it's put onto the actual computer network that you're running. It's kept on the computer network, and the access to that computer network is put onto this like hardware key. And that's like the last level of you storing crypto yourself, where now you have full control of your crypto. It's not stored somewhere on the internet, it's stored on the computer network itself, and you have the access with yourself. So those are kind of the 3 tiers of storage. Now, if you have $1 million or more, don't do any of that. Definitely store, I'd say store like maybe 100 grand or something on the hard wallet, maybe a little bit on the exchange, but most of it should be held with custodians. Those custodians will put it into, again, enterprise grade, air gapped, security chambers, and they hold the hundreds of millions of dollars for people, hundreds of billions of dollars for people. So those are kind of the ways of storing crypto. But it's important in that process to also understand which wallet you're using, because some wallets don't have websites. Trust Wallet doesn't have a website. If you go on the internet and you type in Trust Wallet, first thing that's going to show up is a scam ad. And you're going to click the scam ad and you're going to type in all your info and they're going to take all your money, because there is no website to access that wallet. There's other things where you get a link and you just click the link and it'll go into your MetaMask and it'll steal all your money from your MetaMask, like that. Okay, so understand that these are the kind of risks that you're taking as you're going, because some wallets have different functionalities. Now, the other thing that really gets lost on people is like, what's a network? Like, what is, so remember we said Skittles in a bag is your crypto, your Skittles bag is your wallet. But when she said Teddy gives Lily 1 Bitcoin, how does Teddy give Lily 1 Bitcoin? Teddy would normally want to send it, and he sends a request to a computer system, which is, let's say, Bitcoin. The people who are mining Bitcoin, they're running those computers. Those computers are actually processing transactions. So they send a request to their computer system and say, I want to move the Bitcoin. And they go, sure, you can move it. You just got to pay us a little bit of Bitcoin to move it. And then that computer system actually processes the transaction to move it from one wallet to another, from one bag to another. You have to understand that process. If you don't understand that like some coins can move off from different networks. So if you don't understand the network that you're using, then you could potentially use the wrong network and send your money and it just disappears. Remember, the answer to all this stuff is it just disappears. Okay, you fuck it up, it disappears. Welcome to the new world that we're living in right now. Okay, so when you're moving something and it says like ERC20, that means Ethereum network. That means the computer systems that are going to be used to process that money is Ethereum. If it says TRC20, then it's a Tezos network. If it's, you know, there's many different networks, but you have to understand, okay, I'm going to move my Skittles from here to here. Which route am I going to follow? Which computer system am I going to use? And where am I going to put it? Now, one of the things that's on the horizon for shaking up the world and all this stuff is cyber attacks. So people who are concerned about that kind of thing, like myself, we do tend to use the most complicated path of storing our crypto because it's stored with us. It's the least likely to get cyber attacked. But more than anything, they're going to hack you as a person. The point is to hack you. They're the most hackable thing when it comes to crypto, when it comes to the world, actually. So just like remember that you have to have security protocols around how you store your crypto, where you're keeping your crypto, right? If something's too complicated for you, then just keep it in a place that makes sense to you, where you have support and you can manage it. If you're a technically adept person, store it in one of these storage methods, but remember that you are now taking the responsibility of fucking it all up. And you could potentially actually make your own funds disappear and there will be nobody else to blame for that process, right? But also, yeah, understand which network you're on. So like, crypto has layers. Crypto is technology that's built on layers. Like, let's just look at layers in traditional technology. The internet is layer 1. The internet is just a bunch of computers connected together and it runs one protocol called many protocols, but let's say the main protocol is HTTP, It's the one that allows us to be able to communicate between those computers. But the layer 1 is the internet itself, the computers themselves. Layer 2 would be something like Amazon Web Services, which most of us don't even know what it is and don't even realize that we're using it. But it's basically Amazon's running those computers, and they allow you to program those computers to do stuff and build websites. That's why how web developers build websites and host websites. That's like layer 2. So there's the computer network, then Amazon is on top, allowing you to build sites. Layer 3 are like Netflix, and that's the app that's actually running on top. You have to have the same mental model when you're investing in things. I'm not saying speculating on things. If you're just buying in things in and out, you don't have to do all this. But if you're an investor, and especially participating in this new world of technology, you have to understand these layers. You have to understand, am I buying Bitcoin, which is literally paying for the computer network? So it's like paying for the internet itself. Am I buying Ethereum, which is, again, a different set of computers that are running? It's another internet that's just running by itself. It's technically a virtual machine that's running, that's programmable. Am I buying something that's running on top, like synthetics? Am I buying synthetics? It's a derivatives exchange that runs on top of Ethereum, but that's an app. That app by itself does something. So which layer of the stack am I buying? Now it's like, I need to move this thing around. Okay, if I bought something on the internet, if I bought something on Ethereum, then I can only move it on the Ethereum network, right? So you have to understand how you're gonna move it. If none of this makes sense to you, don't fucking move it, okay? Don't mess this up, yeah.
So, but all of this is non-relevant if you're moving crypto, right? Sorry, all of this is non-relevant if you're buying and selling on an exchange, right?
Exactly, exchanges take care of all this stuff.
Right.
That's why you pay them the fees, right? But it's gonna become more pertinent as we go forward, simply because the new world that's coming will have integrated ways of doing all this stuff. The entire world of crypto is going to be integrated into the financial system through effectively on-ramps and off-ramps. Kind of like what we've already discussed, but money, fiat money, which is like cash, will move into and out of crypto through bridges that they're gonna hook up to the financial system. And at that point, you will need to be somewhat skilled in doing this process, right? But more than likely, there'll be third parties and exchanges and things that will do this for you anyway at higher levels fees. My thing is, there's too many people participating in this world, and they just don't understand the finer nuances of what's actually going on. They don't see that they're moving Skittles. You know, it's ethereal, it's out there, so like it just doesn't make sense for a lot of people. It's important to understand at what level of capacity you're participating, and make sure you keep your technical adeptness up. No, everybody's bullish on XRP. Firstly, most people hate XRP. Yeah, I know in this room it sounds like we're like really bullish on XRP. Most people are like, XRP sucks, because like it basically hasn't made people money for quite a while. It's actually been, pardon? Exactly, it's a huge, for me, it's a huge buy signal, to the point where I was like, I'm gonna put my net worth into it. But for most people, they think like, oh, it's not doing anything, therefore why would I buy it? And it's like, no, that's precisely when you buy it, especially when it has the soundest fundamentals. The reason why I'm so bullish on XRP is because the new financial system that's coming is going to need rails. So I don't say those kind of things, but yes. Yes. But if you buy XRP and you lose all of your money, this is not my fault. It's not financial advice. Please do as you wish. It's a high risk asset to buy right now, but yes.
While we're on that, can you explain XRP, but there's XDC, XLM, what they do?
Yes.
Just that little transport, you know, they're all.
Exactly. I love talking about that, so thank you for giving me the opportunity. So can I please explain what XRP, XDC, and that whole transport system for the financial system, how it works? So we just talked about how crypto moves. Let's look at how money moves, right? Right now in the world, money itself is kept in silos. Money is kept in cash, in banks, in stocks and bonds, derivatives, real estate, art. They're basically silos where value is stored. And in order for it to move, it has to go through intermediaries. It has to go through lawyers. It has to go through governments. It has to go through private companies, which are stock companies. What are they called? Stock markets. But they keep them siloed in one place. And when the money needs to move, It takes sometimes days, sometimes weeks, sometimes months to move. The new system that's coming, first of all, the entire system will be hooked up together. The entire system will be connected together. So every single bank account, every single stock exchange, every single real estate entity or manager in the world, not a manager, but like a government authority that manages real estate, everything will be connected together into one seamless system that allows value to flow around all of those pieces seamlessly. In order for that system to get hooked up, the money needs to move across rails. The way money moves today is money moves through banks and intermediaries. When I want to move $1 million, I actually ask my bank to send $1 million. That bank asks their big friend like JP Morgan, Citi, or HSBC and says, hey, we want to move $1 million to I don't know, Uganda, but we don't have anybody in Uganda to send it. So they ask their friend to send it. That big bank has a correspondent bank in Uganda that's holding, I don't know, $1 billion worth of their own currency. And then they basically add the funds into the pool here, confirm it, and then they release it from the other side. But what that does is, first of all, it takes days for that process to happen because people have to check it along the way. There's like a 7% error rate on those things. Everybody takes fees along the way. Everybody drains you dry in the process. So the average person, people who aren't getting paid shit tons can't even afford that process. And it's people verifying it along the way, and there's errors. Plus, what just happened is there was $1 billion of Ugandan currency sitting in Uganda doing nothing. And money should never be doing nothing. So there's $1 billion. Think about it. In Uganda, this bank has $1 billion, and that bank has $1 billion, and that bank has 10 billion, and that bank has 10 billion. So there's about like 100 billion sitting in Uganda waiting for somebody to use, but it's going to waste because money, as we know, as you said, doesn't make you any money, right? Especially banks. They have the same thing in India. They have the same thing in Costa Rica. They have to do this across the world. So there's trillions of dollars sitting in something called a liquidity pool, going to waste, effectively losing value just so that we can transact value. That's how money moves today. And it's such a pain in the ass. What XRP does is XRP allows you to, first of all, connect every single node point in the world. On each node point is a bank account, or it's a stock exchange, or it's any point where value is sitting in the world. And then it allows communication along the XRP ledger using a language called the ISO 20022 language, banking language. And then it allows, the XRP ledger itself is the liquidity pool. So instead of having trillions of dollars sitting in bank accounts that are going to waste, the XRP ledger itself is made worth trillions of dollars, hundreds of trillion, eventually it'll be $100 trillion for global transfers. And now, anytime I want to send money from here to Uganda, I literally go to somebody who's hooked up to XRP and I say, I want to send $1 million. And they go, yeah, sounds good. They type it into an account saying he wants to send $1 million. The $1 million of value gets added into XRP. It gets added into the liquidity pool that's there, gets verified and sent to the other side to the bank directly without intermediaries within 3 seconds. And you're allowed to move hundreds of trillions of dollars seamlessly. But what that also allows me to do is that allows me to take my stocks and buy stuff with it. That allows me to take my bonds. That allows, like today, if you want to buy real estate in Indonesia, you better cancel all your appointments for the next like year, right? You're gonna have to like spend all this time, effort, and energy paying lawyers and people to actually buy real estate, right? So that allows me to then actually, if I tokenize this whole real estate and I put it onto the blockchain so I can trustlessly verify that Matthias owns this place, which congratulations, beautiful place. I really like this place. Then I can click to send my money from America without meeting anybody, and I can have a smart contract that hooks up to the tokenization platform that says, here is $10 million of value. It gets sent to the platform verifies it, and then verifies the ownership and switches the ownership over to me in 3 seconds. It allows me to take my value from anywhere in the world and transact it for anything in the world seamlessly. That is the banking system that's coming. That's the banking system we're all going to sign up to. Doesn't matter if we like it or not. And in that process, what actually happened is I sent my money. The moment I made the decision to send it, the moment they hit go, the first thing that happened was the bank in Indonesia was told that he's going to move the money. Then the Indonesian government's told he just moved $1 million. I'm an American citizen, so America gets a notification, he just sent $1 million. And then on the other side, the bank receives it and the bank's government gets notified and they all get notified. And before the money reaches the other side, my 30% tax is taken. My 30% tax is deducted without me having any control of that. And if I go to them and say, yeah, if I go to them and say, like, I don't want something that you're trying to inject me with. I don't know what that would be. It's just something maybe out of the blue, could be. They were like, oh, sounds good. Guess what? Your bank account's gone. Good luck. And that's the process that we're all going to be coerced into. And if you think, I'm going to go to crypto and I'm going to get my freedom and all this stuff, they're going to be like, yeah, no problem. You want to make money in DeFi and these like random coins that were created? Guess what? We're officially making that illegal. You want to go to decentralized places and make money? Feel free to do that. You can make magical coins all you want. But as soon as you try to bring it back and put it into the banking system, we're going to have a door that asks, where did this money come from? And then it's a blockchain, so we can go back and track where this money came from. And the moment I see that you even touch DeFi, guess what? That money is no longer legitimate and legal, and it's not allowed to enter the market.
DeFi is going to die in 4 years.
For me, no, DeFi is not going to die. It's going to become corporatized.
So, well, it's going to crash and then come back.
Yeah.
But it's going to, I think you said blow up.
Yeah, because
What's the solution?
Solution is make money in DeFi and get out of DeFi. Put it back into your bank account and then become a corporate. And so here's my solution. Yeah, but here's my solution, okay? I'm becoming a corporation, so I'm no longer me. I'm hiding behind walls of corporations. And then my corporation takes all my crypto. I invest all my crypto into the corporation. Then when the corporation makes money, first of all, I can use it through the corporation's bank account, but the funds are still held in crypto. They're held actually in stable coins that are officially regulated stable coins. So the corporate entity is able to hold value inside of crypto as stable coins outside of DeFi, outside of speculative assets, and still be able to function. Right? And like, if I say something they don't want and they tell me, you can't have a bank account, I go, yes, sounds good. I had zero in my bank account anyway. You know, this entity that I may or may not own that you don't know about, I mean, they do know about it, you report it to them. But the point is that entity is allowed to then function separately from SIM, because entities are considered people effectively by the law.
How do you officially connect a MetaMask wallet or any kind of wallet to an official corporation? I have to open.
You don't. You don't connect the wallet.
I have to open the wallet.
Yeah, so
how do I give it to the corporation officially?
So what we do is we basically set up corporate structures for you that allow you to be able to put your crypto legally through the legal system and actually invest it as assets into your company. It's a complicated process, but these are onshore in Indonesia. I mean, you can do it offshore too, but I don't like to set it up offshore. You have to go there to set up bank accounts, and then residency becomes an issue and all these kind of things. So for people living here, we're doing it through Indonesia, and because we have connections with the regulators, so we get green lights on things which a lot of people might not get in other countries. And there's no regulations right now, so we get to kind of write the regulations as we go, right? But these are onshore companies in Indonesia. And actually, contrary to popular belief, Indonesia is really conducive to blockchain. They're super interested in blockchain because they know that this is going to be something that is going to allow them to control their financial freedom and not let the Chinese come and take over the whole country with their money. And we're in discussions with the government about this. No, they're not going to be. It's not going to be legal tender. You know that. You know that. Okay. It's not going to be legal tender. You can't make purchases with it. But as an asset, you're allowed to bring it into the country, and they love anybody bringing assets into the country, especially digital assets, because they're literally the soundest way of storing value, basically. Right?
Can I rephrase my previous question?
Yes.
What is going to happen?
Yeah.
Really near that everybody's bullish on fucking XRP.
Oh, so the lawsuit that happened against XRP is XRP.
I'm talking about December explosion. And
Yeah.
What is going to happen in the banking system and so on?
Oh.
That XRP gonna wreck.
Oh, now look, the reason why everybody's so hyped up on it right now is because it has nothing to do with the banking system. That stuff it's already happened. That stuff is already being hooked up in the background. It's going to take between end of 2022, November 2022 to November 2025 for that system to get implemented, the banking system that I'm talking about. They have timelines, they've released all this stuff. Nobody's just reading the documents. But separate of that, so like by 2025, XRP will be leaps and bounds beyond where it is today. And actually, to answer your question, I'll answer your question first, because I keep having ADD about it. There's a lawsuit out against it that the SEC has sued them and tried to say that they're a security, but actually what happened is they're giving them regulatory clarity by proving that they're not a security so that they can be deemed crucial for a global financial function. And it'll be one of the first cryptocurrencies that has actual regulatory clarity. And when that happens, the amount of money that is going to flow into Ripple, the company, and XRP, the token, from the traditional financial world should make it shoot up. Okay, that's one thing. Where does XDC and Algorand and all these things fit in? Okay, we built the rails. We built them on XRP. There's a liquidity pool in the middle. Every single bank account is hooked up to this ledger. Central banks control the big node points, and then they give control to the banks on the auxiliary parts. But now we need this system to be able to interoperate with crypto and the wider world, but in a way that it's insulated. So plebs are not allowed to touch it, because we're only going to be operating on the central bank digital currency system. This is how they're going to take everything and leave us with nothing, because we're kept in currencies, dollars, Indonesian rupee, all these things, which infinitely inflate upwards. Then in order for that system to interoperate with this value system, you need interoperability layers. So XDC is based on a technology called Corda, and it is an interoperability platform that allows the triggering of smart contracts on blockchains. So that's how I hook up this whole system to Ethereum, to everything. You know, XRP is the interledger protocol. So these interledger protocols sit in between the ledgers and they connect them all. But the way that XRP connects to many systems in a private fashion, where it's not exposed, the data is not exposed publicly, is through, one of the ways is through XDC. XDC is a token that's used to transact value in case you need to move it inside the system. XRP can also be used, but the Corda technology is used to trigger smart contracts. Because we said everything's going to be automated, right? So you need to be the ability to privately trigger smart contracts on all these different blockchains. That's XDC. Algorand is a publicly visible version of that same technology. So if it's a blockchain that we need to have public exposure to it, it's still able to trigger different things on it. XLM is a banking system that actually is not, each node point is not controlled. Because with XRP, every single bank account has to be controlled by a central entity. It just doesn't function otherwise. And every single one of those central, every single bank account has to be controlled by a custodian, and every single custodian has to be controlled by a central authority. So you need a central bank or some kind of central bank-like system, and then you need banks who are the custodians, and then each person gets a node point. That's how XRP is laid out. XLM is laid out in a way you don't need those things. You can just have directly the bank account and it can be centrally controlled, but it still will need to hook up to these interoperability layers. And those interoperability layers are where they're going to control crypto. You know, they don't need to control each one of the coins. They don't need to control all the decentralized platforms. They simply just need to control those pinch points where they actually allow the value to move either between blockchains, but also from the blockchain to the traditional banking system. And those interoperability layers will also interact with the central bank digital currency wallets that we'll have, that will be given to us by the governments. And then whatever value we generate will have to be converted into these traditional currencies for us to be able to use. But if you try to accrue those currencies, you will not be able to, because they'll be inflating they'll be inflating away the value of those currencies infinitely going forward. Thank you. I'm glad that made sense. It barely made sense to me.
So if any one of those gets chosen by the establishment by the day, it's going to be worth a lot of money.
They're already chosen. They're all ISO 20022 compatible. Now that word has come up enough times that should make you want to go Google what this thing is. Because anything that is ISO 2022 certified means that it's already been chosen, it's already part of the system. US dollar circle is already part of the system, IOTA is already part of the system. And there's a bunch of them that we don't even know. Quant, I know, is part of the system. So, and that's why what I do is I'm looking 10 years ahead and I'm focusing on those ones. You know, because like the short-term money, that's great. But this is generational wealth that's going to happen in these actual implementations. And that's actually a really good point to bring up right now too. What we've seen up until now is like the internet from 1990 to 1997. Everything we've seen up until now, you know, we're thinking, oh my God, somebody made $357 million from $50 a Bitcoin. And that's a real thing. That number is real. Somebody somewhere, if they just held $50 a Bitcoin from 2010 until now, made $357 million, probably even more now. And we're thinking, the opportunity's done, it's gone, that ship has left, I wish I was on that boat. We're where the internet was in 1997, statistically speaking. The growth of the internet, the number of users, technology, all these technologies grow on an exponential curve, and where we are on that exponential curve is where the internet was in 1997. You know, you remember the internet in 1997? Mom, put down the phone. Remember that? That's where we were. And then we were like, what is this? Some people are like, is this the internet with the A with the circle thing around it? Is the A with the circle the internet? And it's like, no, there's more to it, you know? And we were sending emails and like clicking some things. And then the next thing that happened is one of the biggest crashes that ever happened in history happened right at that point. 1997, internet's going up. Hype gets created, market gets blown up. There's all this hype potential, tens of thousands of different technologies. We're going to change the world. We're going to build a new Earth. We're going to solve every single problem on the planet. And the next thing that happened is 98% of the wealth was wiped off the map. It wasn't actually wiped off the map. It was taken by Wall Street. It was called the dot-com bubble. Study it. We're going to go through a dot-com bubble. I think we're in it. And whoever was in there lost a lot of wealth. If they picked the wrong ones, they lost almost all their wealth. Somebody was in there who bought a shit ton of Amazon stock and watched 98% of Amazon's value get diminished, and they just held that Amazon stock. And that Amazon stock then went from that to like orders of magnitude higher and came to take over the entire world. Google took over the entire world. Microsoft, IBM, these companies were there, they crashed, and then they took over the entire world. And that's what we're seeing play out now. The actual growth of this technology is still ahead of us, but it will require us to go through these crashes. And in that crash, we will need to be able to understand how to participate in the right way. If we think that we're going to get in now, 10 years after this game has started, right when regulators are coming, and we're going to play the game that's been played for the last 10 years, that's outdated strategy. They know we know that. They know we have access to these systems. So they know, like, we're watching these things, and they know how to manipulate the whole process. But if you just don't fuck it up, if you just don't lose your money in this process, right? Stop thinking about making money. One of the best ways to lose money is to only think about making money. Think about not losing money, right? Learn the game of not losing money. Because if you just learn how not to lose money over a long period of time, the amount of money you end up not losing is ridiculous. It adds up. But if you just go and lose 50% one time, any good trader knows if you blow up 50% of your account, it's going to take you infinitely longer to make that money back compared to if you just made less money and made sure you didn't lose money. And the wolves are here to take all your fucking money. As of yesterday, they're here. They've been here the whole time kind of toying with us, but now they're here to take it. So understand what crypto is, which one you're investing in, what wallets are, why you're buying these things, how long are you holding it for, what the thing itself does, how to participate in it, how adept are you in this whole process, and what level of engagement would you like to have, and how do you want to play this game? And then also, where do you go? Our friend was saying, like, the banking system's going to go. It's 100% in the cards. If you think cash is the safest place to be, get ready for a rude wake-up call. And it's going to happen within the next 2 years. Within. Yeah.
So hypothetically, I've got £1 million.
Yeah.
Where do I put it then? If the banking, would I put it in a protocol like say Anchor? Because that's sure.
What I would put it into different protocols, right? I would put a little bit into Anchor. I put a little bit into USDC. If gold is doing well, I would put a little bit into PaxG. I would put it, in different places, and then I would take some of it and I would invest it. Especially if you're going to be holding it for years on end, I would invest it into very safe assets, digital assets, right? And then when you need some money, you just sell some of those stable coins that you have, and then you're able to do it. Now, you then have to stay on top of things, because if tomorrow they say decentralized stable coins are now becoming illegal, there's going to be a run on those decentralized stable coins. Then you got to move it around and put it somewhere else. But yeah, like UST, BUSD, USDC, DAI, UST, yeah. Those are great places to keep it, because then at least you're holding it. Nobody else is. But now here's the thing: you just pulled $1 million out of the bank, and you just told a whole room that you have $1 million. Never do that. First of all. Secondly, hypothetically, perfect. Whew, almost. You almost did it. It's perfect. No, but then you have to make sure you have levels of security set up around your processes, because now you have become the custodian of your own funds. And we pay banks because they have guns. Now you don't have those guns, so you got to make sure you have your own security, because it's just as easy as it is for you to custody it, it's also easy for you to lose it. Like, for example, these wallets and all this stuff, if you simply don't understand the right network and you send it, it will disappear into the ether without anybody ever being able to do anything about it. And it happens all the time. I know somebody who $1 million just disappeared. Oops, I didn't sleep properly, so I just clicked the wrong thing and $1 million disappeared. Right? So to that point, there's a few mistakes that we've seen that I really want to highlight. First of all, when you're using a network to move stuff, remember, you got to pay for that network. On exchanges, you don't notice any of this stuff, because we're used to doing exchanges. We just buy and sell, blah, 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 everything just happens. Then you put it on a wallet, and you're like, okay, the next time the market drops, I'm gonna put it back into the exchange, then I'm gonna do this. And then you go to send it, and it goes, there's not enough gas. And you're like, the fuck is gas? Like, in my car, there's not enough gas? What's going on? And then you're sitting there wondering all this stuff. What's actually happening is you don't have the coin to pay for that computer network to be able to move your stuff. So first of all, when you do this, when you keep it in your wallets and stuff, put a little bit there. Put like $5 there. And then move the $5 out. Put it back into your exchange. Always when you send a transaction, again, I'm super paranoid. Every time I send a transaction, I actually send a little bit first. And you're probably like, I pay double the fees. Yeah, but I don't lose all my money. I send a little bit first and make sure it shows up. Usually when I'm sending it, if there's an option to save that address on the old exchange or wherever I'm sending it from, I save the address. Save the address, and I'll send a test transaction. As long as it arrives, then I can reliably use that address to be able to send stuff. Secondly, when you do that, when you send it to a wallet and you send it back, the moment you try to send it back, your wallet's going to say, you don't have enough of something, which is the coin you need to be able to move that value around. And a lot of times people are like, what do you mean I need a coin to move the value around? I have Bitcoin. Where's the Bitcoin? Who's holding the Bitcoin? I'm not holding it. It's being kept inside of an accounting book that's being run on a computer that some miner is running somewhere. Okay, these miners are all running computers, and these computers have an accounting book that says Sim has 1 Bitcoin. When I want to send my 1 Bitcoin to Gozian, I have to go ask that computer, hey computer, can you send that 1 Bitcoin to Gozian? The computer's like, I'll send it, but I gotta use up some electricity to do that. And actually, I've been running the whole time to try to find Bitcoin, so I'm using up electricity. You need to pay me. And I need to go, okay, here, I'll give you a little bit of Bitcoin in order for me to use your computer to actually send that value. And that process is why you end up paying fees. And that's why mining and all this stuff is important, or staking, or whatever's going on. So make sure you have enough of the thing, and then of the coin that you need to move on the network. Make sure you understand which network you're moving it on. Because there's some tokens you'll hold it, and it could be a token that's on 6 different networks, but you're holding a certain version of it. If you don't understand the version of the token that you're holding, and you send it on the wrong computer system, that computer system is going to be like, that's not one of our things. You sent us $1 million to move, but like that million is not on our accounting books. Bye-bye. It doesn't come back. It doesn't go anywhere. So make sure you understand that. Make sure you have the coins. Make sure you've done a test transaction and you moved it around and you actually understand the process. If a hiccup comes up, read and learn about it before you fully bring it all under your own control. We already talked about the process of Google is one of the biggest ways people get hacked. 100%. You go into Google and you type in something, and then you hit the link, and then you do something in crypto, you're gonna get hacked. Not 100% of the time, but about 50% of the hacks that I've seen were simply because the hackers are running an ad on Google, and we don't think to read the part that says add. And so we think we rely on Google, and the first thing that shows up, we click it and we type in our wallets and we type in our addresses and we type in our phrases. Okay? Whichever thing you're going to access on the internet, bookmark it. Like go to the exchange, bookmark it, and have it saved. Put a little button on there so that you can click that button and go to stuff. Because when you type it into Google, expect that the first thing that shows up is likely a scam ad that's there to steal your money. If it's on exchanges, you're good. Most of the time on exchange, you're not completely good. There's been times where there's been really elaborate hacks that make it look like, pardon? Yeah, exactly. Cryptopia, it just happened to Poloniex. That's actually how the person lost $1 million. Sorry? It's, don't worry about it. It's just, yeah, exactly. You don't Google it. Just don't Google it. Don't Google it and don't log into it, please. I don't even know. Yeah, I haven't been following it. But don't type things into Google. Like if you do type it into Google, make sure you vet the fact that you're going to the right website, and once you go to the website, bookmark it and keep it there. If you're storing your phrases with these wallets, there's a phrase that's how you access your account, okay? If you store that phrase somewhere and somebody gains access to that phrase, they will take all your money. Okay, very important thing. So a lot of times people are like, how do I store it without having it exposed in a way that somebody could take it? Depending on how good your memory is, it's a 12-word phrase, right? Or 24-word phrase. You could take 20 of those words and you could store it. And 4 of those words you could memorize, and you could tell your friends those 4 words to be like, memorize these 4 words. And they don't know what those 4 words are, but you say, memorize the damn words. In case I get dementia, those are the words that you need to, I'll tell you then, but I'll have dementia as well. Never mind, skip that point. But the point is, you save those 4 words in your brain, and then you store the rest of the words. So even if somebody got access to those words, they still would be missing 4 words from being able to gain access to it. Sorry? You can get tattoos, yeah, 100%. But I mean, like, if somebody was to like, so one of the easiest hacks that we joke about in the crypto world, it's called the $5 wrench attack. Somebody just gets a $5 wrench and hits you in the head with it, and then convinces you to give up your money, right? If you have tattoos, I mean, you say some of the words and they might be able to figure it out. But yeah, some people do tattoos, some people bury the word somewhere.
Somewhere that nobody wants to see it.
Yeah, exactly. I know a few places. Okay? Yes. So what you're saying is tattoo around the butthole. Okay, sounds good.
How to check it then?
Sorry?
How to check it on your own?
How to check how much is in there?
How to check the tattoo on your own?
Yeah. You have to set it up in mirror. You have to mirror the tattoo. Oh God. Can we cut this out, please? Can we delete this from the tape?
Should I stop the recording?
Listen, at that point, I wouldn't even want to look at it because I don't want to look at my own butthole. I'm sorry, girl. Okay. What were we talking about? We're doing well. Okay, and then the final thing is just scam wallets and scam exchanges. Actually, yeah. So there's just a ton of scam wallets and scam exchanges that if you download the wrong one and put your money into it, it won't come out. Another great way to not lose money in crypto is if anybody says, I will invest the crypto for you, and the first step they say is give me your crypto and I'll invest it for you, run for the door. Absolutely run for the door. Nobody should ever have to take your crypto to invest it. You should always invest it for yourself. I'm sorry if they're Russian, just don't even have the conversation, okay? There's too many Russian scams going on. They're really good at this process.
How do we know that the apps on the App Store are legit?
So that's why you have to do the research ahead of time and know, like, okay, I'm gonna, let's say I'm gonna get Exodus Wallet. When you type in Exodus Wallet, it should show the main Exodus Wallet with like millions of downloads, right? Or you can go to Exodus Wallet's website and you can click the link and you can go through that.
But if the website, I'm not sure that's the right website.
But no, but you should make sure the website's the right website. Here's how you do it. You just read the web address, you know, exodus.com, right? And like, okay, if you're really not sure, then you go to like a site that says like, you know, is a reliable site, TechCrunch or something, and it says top wallets. And TechCrunch tells you top wallets, and then they have a list, and you can go to. You don't need to be super paranoid about it. Here's the thing: just don't click the ad. Just don't click the ad. The scammers never come to the top of the Google search results simply because they don't have the kind of traffic to do that, and Google filters them out. But they do have enough money to pay for the ads. And if you simply click on things without even realizing that they're ads, you should not be in crypto. You should not be in crypto. Because like you're going to click on some random link in your email and all your money's going to disappear. In which case, if you're that type of person, don't play this game like this. Leave it with the exchange. Leave it with few exchanges, you know, reliable custodians. I know people think of exchanges as like these like evil things, not your keys, not your crypto. Yeah, there's a third party risk. Yeah, they could get hacked. Yeah, some of them could eventually go down if you're actually not following the right ones. But if you go to like reliable exchanges, and you're staying on top of the news and stuff, it's okay. Like, it's not the end of the world.
How about when the exchange app, in exchange app gives you an update? Like, you need to download the update.
Then you should update it.
Okay.
Yeah.
Because that's scary. You're like, shit.
No, I mean, if the app itself is telling you to update it, yeah, then do it. You know, or your phone's telling you to update. I know we get really paranoid in this world, but like, you know, make sure you understand the technology part well enough so that you're participating in it. If you don't understand it well enough, then you know, like we said, back away to exchanges or get some help. Get some help in that process, right? Yes, sir.
Chat here. So someone asked, what's the all-time high for BTC in the next 2 weeks according to your?
What's the all-time high?
Yeah, BTC in the next 2 weeks according to you.
Good question. In the next 2 weeks, I think 67K. Yeah, because 67K is projected to be the place where people would actually FOMO in a decent bit, and then some kind of correction would happen. Yeah. Now, the bigger question is, what's my all-time high in 10 years? $15 million.
Still in dollars?
I mean, dollars are worthless by that time. That's why I'm saying $15 million. It'll buy like $1.5 million worth of stuff value, but $15 million. 10 years. Let's say 12 years, because if there's a cycle process, 12 years, but yes. Because when you're looking at the inflation of the currency supply in every single fiat system before, at this point, they have to inflate the currency by 10x from here in order for them to get to the point, in order for them to just keep the system afloat. Less than, yeah, like I'd say less than $1.5 million. Yeah. Yeah, it's still a lot.
Do you feel crypto will stop being judged against the USDT or the US dollar? Because like, how much is Bitcoin today? 67, 400.
Yeah.
When is it going to be changed, or is it going to change into a different currency?
Yeah, XRP. No, I seriously believe that. Because in order for you to judge it against something else, it has to be a globally acceptable asset. It has to be a global settlement asset, a reserve currency, sure, but it has to be an asset that you can compare all assets against. I think Bitcoin is not that unit of account. Bitcoin is simply a beta test of the computers turning on. And we were believed to accrue Bitcoin. And value, as a value storage, a value accruing system, it's fantastic. So it is going to grow value. But we're not going to get to some point where we're going to say, this is this many Bitcoin. The day we switch, it'll be XRP or something else that hasn't come along yet. But right now, it looks like it's going to be XRP simply because it's going to be the thing that actually carries the value across the world, and it's the unit of count that inflates against the dollars at a level where we'll be able to at least use it. It'll have a cap value at some point simply because they need a stable asset to be able to do this, and they'll cap it and they'll actually expand it in a reliable way rather than letting us speculate. And the way that they're going to do that is they're going to custody the XRP from every person who owns it and make it illegal for us to own it and buy it off of us and then buy it off all the exchanges and make sure that. Well, yeah, I really hope so. Yeah, otherwise I'm fucked. Yeah. sending mail. Remember, we thought the internet was just a new way of communicating things and sending mail and scientists sharing documents and stuff. And then internet became the new way of everything. It came to take over the entire world. There isn't a point of the world that internet doesn't touch. And there's very few processes left, like breathing and walking, that the internet doesn't touch. But even that, you know, we'll go into a panic attack if we lose our phone, so it kind of affects breathing too. But you know, but there's literally a patent Microsoft has on crypto being rewarded according to physical bodily action, which means they literally are patenting the technology where they tell humans to do something, and if the human does not move their body in the right way that they just said, they're not going to get paid. And that's how granular I'm seeing this thing happen. Crypto is the future of absolutely 100% everything. Yeah, it's patent number 20020606060. If you're into sixes, there's 3 of them in there. I'm just saying, okay? But yeah.
Remember that, you can definitely remember all your passphrases, right?
Oh, it's ridiculous. It's ridiculous. I remember random stuff for no reason, right? I'm also a conspiracy theorist, so that one's I'm like, hey guys, look up this patent, okay? But sorry, it is literally the future of every single function happening in the world, simply because the internet needs to be in the middle of every single process that humans do, every single process from waking until sleep that humans do, in order for a central authority to control every single thing, all the humans, all the services, all the resources, all the everything. The technocratic kind of manifesto has always had that. You can. Most of them are scams. In theory, statistically speaking, you will lose all of your money if you put it into crypto. If you just randomly if you threw a dart and put it in there, the chances of you losing all your money is higher, simply because $2 trillion is here. So most of them will take your money and never return. And there's been so many good projects from 2013, from 2017 that were like going to be these world-changing projects, and they turned out to be multi-billion-dollar scams. And they're sitting today on that money and they've run away with it, right? So, but you cannot fuck it up by leaving the old system. That's one thing I will say. Leaving the old, like that old system had 130 years to run. Well, but basically 100 years almost to the day to run. It's over. These cycles go in 100-year cycles. They've inflated it to a point where they need to like come in and get somebody to hold the bags while they crash the whole system. So exiting that old system is a no-brainer. Entering the new system is fraught with potholes and potential mess-ups. Get educated, start participating, and then also there's low-risk ways of investing now so you don't lose your money, and then this game is to be played over our lifetimes. And over the next 10 years, it's going to be the greatest prosperity generation event that's ever happened in history, that will ever happen for the next 100 years. So just don't lose your money first, get it into crypto. Don't get greedy about every time it goes up and pumps green, you want to get on every single train and you want to make the most amount of money. Teach yourself the right psychology, and then play this game on the yearly scale, and there's opportunities coming in the next 10 years to invest that will blow everything out of the water. In 10 years, most of the cryptos that exist today will not even show up on the top 100 list, because there's much bigger, better projects coming. Sorry, what was your question?
It's a detail, but it's something that I didn't really understand.
Okay. You showed a graph earlier on, and on that graph there was a model saying that it's going to hit $100,000 value, and it's going to continue going. It was a graph similar to this one. Does this graph, and does this mean that BTC we saw before? What is this?
Never say never.
Okay.
Oh,
Yeah, it was this one.
thank you. Yeah, you try to open Trust Wallet to show the scam, but I have ad blockers, so you can't see it.
That's fun.
Yeah.
Fun.
Come on. Where is it? Fine. Can you please type in stock to flow? Stock to flow. Is it stock to FOMO? Oh, stock to flow, sorry. Yeah, there is a stock to FOMO model as well. We just looked at it. Yeah, that's good. We'll be done. We're already 6 minutes over. Yeah, usually we're done by 1. Where was? I mean, we just posted it in the other group. So this is the projected growth of this model that this model projects according to the amount of stock that exists for Bitcoin and the amount of demand that's going to exist there. So it's, I mean, this is the stock to flow, the cross asset model. But the point is, this model says that it should level off around 263K. This means the amount of Bitcoin that there is, it's so rare and so many people want it. As more people want it, and the less and less of it exists, it should reach that and go past that. Like, for example, it's gone, you know, last time it said it was supposed to be at 7,000 and it went all the way up to 20,000 and then it corrected back down to, on average, around that 7,000 mark, and then it went down to 3,000 and then came back down to the 7,000. So it's kind of followed along with this. It's not saying it's going to be there at all times, but this is the average that it's projecting. One of the models is projecting 108,000. One of the models is projecting 277,000.
Let's say it's been 463 days.
Yeah, what's the timeline of this projection?
So this is saying this will be, it's projecting by April of 2022. Well, it was projecting that already we should be at $250,000, right? And this is not. So that's why right now it is undervalued, but also, guys, this is Wall Street. This is the calling card of Wall Street. This is how they do it. They take an asset and they suppress its value. They use futures trading, like we said, to suppress the asset's value and keep it at a different level by trading paper versions of it rather than trading the actual versions of it. By trading derivatives rather than trading the actual version.
What's the interest?
So that they can buy it.
But if they always keep the assets, if they keep the assets constantly low, then
they're not going to keep them constantly low. They're going to keep it low so that they create a nice floor for them to get on, right? And when we're saying they keep it low, what they're doing is they're pulling it out of our pockets. The goal is we have too much of it. 18.7 million already exists. 78% doesn't move, and it's in our diamond hands. We're holding on to it. Some gamer boy who grew up to be an adult now has more of it than, like, you know, the wealthiest people out there in the world. Now, when the regulatory clarity comes, they need to pry it from that kid's hands. And the way that they're going to do it is this: they're going to manipulate it and keep it in a place where people think, like, oh my God, they're right, it's worthless. The same way they're doing with gold right now. Everybody thinks gold's worthless. Everybody thinks silver is worthless. In the middle of the greatest collapse we've ever experienced, people think those assets are worthless simply because the price has been suppressed the whole time. Are they going to go up? Yeah, but they haven't gone up for like freaking 10 years, you know, the way that they were supposed to go up. Eventually they will go up, but by that time, the Chinese central bank will have most of them, and, you know, they will have made the purchases themselves, and they need to onboard all the institutions, and they can't onboard them at, you know, $500,000 Bitcoin. So their plan is to suppress it, suppress it, convince us that it's going up, and then actually make it go down. And then when we're convinced that it goes down, then make it go up, and keep us on this roller coaster where we keep giving them money and we keep giving them our Bitcoin. And eventually it will go to these valuations and probably well beyond that. But by that time, they will hold most of it.
So this is kind of showing that there's manipulation happening.
We're way off. We're way off of the actual natural models. Yeah, like. I mean, why do you think I'm so paranoid? Why do you think I got so paranoid all of a sudden? Because I've been through this. I've been through it from here. Okay, we went up, things corrected. The natural price action kind of comes along. This one was beautifully natural, went up, crashed, like a beautiful up, beautiful down. I mean, it wasn't beautiful to the people that it was happening to, but
Where are we?
as far as I'm seeing right now, everybody's screaming they're getting rich, right? Yeah, like the actual psychoanalysis says we're in belief. It says we're right here. I'm hearing something between this, time to get fully invested, and we're all going to get rich. We're somewhere there. Pardon? Yep. Right here. So yeah, but like right now we're at the edge of belief. The psychometrics are saying we're at the edge of belief and going into euphoria. So we're like somewhere here. But I'm concerned. About this being May. I'm concerned about this being May because this same philosophy is also right here while we're complacent. Okay, and I'm not saying this is the final peak. I'm just saying if I was them, it would be really wise for me to do this and convince people that we're here and we're going to here in December, while we actually they front ran our expectations, are dumping on us, and they this was the bottom, this was 30K, now we're back up to like we're actually like right here again, 65, 64 and a half, 64.1, and then actually cause it to dump because some news comes out and the narrative changes and all this kind of stuff, right? Exactly. Exactly. We don't, but that leverage is what drove up the price in the first place, right? So therein lies the futures manipulation, where they drive leverage into a market, drive it up to overvalued levels, crash it, all that leverage gets wiped out, somebody gets very rich, almost everybody loses a bunch of money. There isn't as much leverage in the markets, but there also aren't whales in the markets. There also aren't large accounts in the markets. Oh, there's FOMO now. There's FOMO, like not retail FOMO. Yeah, the real retail FOMO has not happened. That's why I think this is just a bump. I think this cycle is going much longer than we are expecting it to go. And this was just the first bump, because this has to play out again and again and again for people to lose money, right? In other cycles, this has played out, like in 2013, this played out in a macro scale twice. We went up, crashed 80%, and then we went up to the real run. In 2017, this played out in micro scale about 5 times, where we had 30% crashes and the same thing played out, right? In the macro scale, this played out one big time. I think now, with extending cycles, with lengthening cycles, this process is probably going to play out at least twice, maybe even longer, and it's going to take longer time. It did. Yep.
So that would lead you to think that this will go on the way up.
Look, we could be on the way up. There's in my approximation for this. Yeah, we could be on the way up. My thing is like, okay, we're all looking at the Bitcoin charts, right? But this same thing plays out really beautifully in all the other charts, because there's a lot of solid projects out there which are valuable on their own. Oops. So this Bitcoin, we're saying, yeah, it's back to its all-time highs. Take care, brother. Bitcoin, we're saying, is back to its all-time highs. It's now 63,997. It's like inches away from its all-time high, but let's call it an all-time high. Ethereum has basically shown lower highs between this. Ethereum? No, it's close. It's really close. It's like a hair's razor close, and it could even probably go a little bit farther to convince us, and it could just shoot past, and people could make a shit ton of money, right? So that's what we're all hoping for. One sec. So, like Link is another solid project that actually ran up early, and then now it's dumped, and it's actually making basically a dead cat bounce. You type in BTC dominance.
I know it's past your closing time. Can you touch on that for a second and follow?
Where's BTC dominance? Type in BTC.D, please.
What is
BTC.D?
Dominance is like how dominant is Bitcoin in the crypto markets. Thank you for your time. Appreciate it. Thank you. Thanks for coming. I mean, Bitcoin dominance should trend downwards over the long term anyway, simply because there's more projects coming out, right? But yeah, Bitcoin dominance has gone up. Ever since October, it's gone up a decent bit from like 41 to 47%. But you know, these kind of giant ebbs and flows that we've seen earlier, I think they're going to be much less significant in that process. You know, we're all waiting for this. We're all waiting for the bull run like we had in 2017, where Bitcoin dominance fell off of a cliff, and that was the altcoin seasons that we had. And then, you know, during this part, altcoins go on a massive run. That's not happening anymore. Bitcoin dominance is but it's just fundamentally not something that will play out the same, because Bitcoin dominates less and less of the market.
As Bitcoin dominance goes up,
Yeah.
it's basically the money flowing from alts into Bitcoin.
Partially.
Thereby hurting alts.
Partially, but it's also like money that's flowing from externally into crypto and going into Bitcoin first. Causing the market cap to go up and causing a larger percentage of Bitcoin to be in there. So a little bit of people do move out of other alts and go into Bitcoin. Some people are playing that game, but it's not like it's one of the biggest drivers of people leading alts. So that's why Bitcoin dominance is becoming less and less of an important metric. I mean, it's more valuable for like, yeah, once Bitcoin dominance goes up, next thing that should happen is the alts should actually get the flow of that money that's coming out. So Bitcoin dominance would go down and the alts would go up. So there is some relativity to it. But I think a lot of the dynamics that we saw play out in previous markets that we're using as these like fundamental ethos aren't playing out the same. And they haven't played out the same. You know, we've seen many alts pump 100x just on their own. You know, we saw ADA do that from last year alongside Bitcoin. Then we saw Sol just do that randomly now, you know, on its own accord. And we're seeing this like popcorn effect rather than seeing beautiful flow from one coin down to the other coins, right? All right, guys. Thank you. We've gone over. I appreciate you guys.